So you got some cash and you want to keep it somewhere safe. Economy is shaky and stock market is too risky. You're looking for a place to park your cash safely and, if possible, make some return. You've also heard the saying, cash is trash, meaning leaving money in the bank is a ridiculous idea. So then the question becomes, is there a safe place, not the stock market, where you can still invest your cash and earn some return? Let's look at some options. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and everything that impacts our money. Okay, so here is a scenario. You want to save some cash because you know you will need it in the short term. For example, stashing your emergency fund, putting aside money for a down payment for your first house, or saving money for a big vacation or a big purchase, or you're very close to retirement and want to keep your money safe. In all of these scenarios, you want your money to be safe and accessible. In this video, let's look at some options where you can park your money safely while making some return on it. I will share options and maybe do a follow-on video on options that require a deeper discussion. Before we look at options, here is some economics for you. The Federal Reserve's interest rate decision can impact the rates that banks offer on saving accounts, money market, and certificate of deposits. When Fed raises or lowers the Fed fund rate, banks typically respond by moving savings and money market account yields in the same direction. We are in a super low interest rate environment, so don't expect to get amazing yields. The Fed wants you to spend money and literally is discouraging saving any money. More on that in this video. Having said that, let's get back to some options. Let's start with a savings account. Is this really an option? Apparently, the national average interest rate on savings account stands at 0.06%. That means for every $5,000 you put into a savings account will give you a return of 3% annually. That sounds like an insult as opposed to any return. So let's trash that idea. Now there is something called as the high yield savings account, which offers a better rate. I did a quick scan on Bankrate and the rates varied from 0.7 to 0.95%. Not bad, I would say. It's something. Also, banks will offer cash rewards just to open an account with them. These accounts may have some restrictions like minimum account balance, number of transactions per year, or a monthly maintenance fee. So do look out for that. Then there are these fintech companies like Chime and M1 Finance that offer high yield checking accounts with a similar return or even better at times. I have an account with M1 Finance and any uninvested cash in my account yields me 1%, much better than a typical savings account. Some banks offer money market accounts. This is the next best option. It usually pays a higher yield compared to a check-in or a savings account and typically offer a limited number of transactions per month. Occasionally, these will have certain other fees as well, so make sure to ask about it. To be honest, I didn't find much difference in rates between high yield savings account and rates offered by money market accounts, at least for now, and rates do fluctuate constantly. This brings me to certificate of deposits or CDs. The idea is you deposit money for a specific length of time in exchange for a guaranteed return, no matter what happens to the interest rate during that period. The longer the term of investment, which ranges from 3 months to 5 years, the higher the yield. I've seen rates from 0.6% for 6 months to 1.5% for a 5-year CD. Here's a quick summary between the options we've talked so far. Might help you make a decision. Putting money in real estate is another good alternative to park your cash, as it operates outside of the stock market. I'm not talking about a house or a piece of property, which can take some serious capital and time. I'm thinking REITs that can give you real estate exposure and is far more liquid compared to buying a piece of property. Also, you can think about something like Fundrise, which makes investing in real estate much easier and affordable. They offer low-cost real estate ETFs and have performed really well. You can expect anything from 5 to 8% annually using the real estate option. A little bit riskier option is peer-to-peer loans. Online lenders like Prosper and Lending Club are options for investors who are willing to lend money to borrowers who need cash for anything, from starting a business or home improvement. When using this option, focus on borrowers with high credit worthiness. You can probably expect 4 to 5% using this option. Then there is gold. Gold is considered a safe haven or store of value. Usually, people flee to gold when they're expecting inflation or a lot of economic uncertainty. Gold tends to be a safe place to hide your cash in such scenarios. The best way to park your cash in gold is by buying gold ETF GLD. You can also look into gold miners via ETF GDX. If safety is what you're really after, US Treasury bills, notes, and bonds is probably the best possible option. These are backed by the US government. Now, this topic probably deserves a separate video, but here's a quick summary. These fall in fixed income category, meaning provides a return in the form of fixed periodic payments and the return of actual principal at maturity. There are a number of options to pick from. Treasury bills, which mature in less than a year, notes that mature anywhere from 2 to 10 years. Then there are these others to consider, like Series 1 bonds and Treasury Inflation Protection Securities, or TIPS. Finally, there are muni bonds offered by state and local government, and corporate bonds. You can buy government issues bonds directly from the government, commission-free at treasurydirect.gov. Interest rate on these depend on type of bond, duration, interest rate set by the Fed, and inflation. I probably need to do a separate video on bonds, but here is a quick summary between Series 1 bonds and TIPS. Spend some time on the website to better understand these products. They can get a bit confusing. For most of us, however, a bond ETF makes more sense as opposed to individual bonds. You get more price transparency. ETF prices are published on the exchange and updated every 15 seconds during the trading day. You get diversification, since with an ETF, you can own thousands of bonds in an index. They are less complex and easy to trade. Here is my take on bonds. Longer duration bonds come with higher yield, but also come with additional risk. Should the interest rates go higher, prices of longer duration bonds will fall much faster compared to shorter duration bonds. Since interest rates are at historic lows, it makes more sense to stick with shorter duration bonds. In summary, focus on bond ETFs, stick with shorter duration bonds, and go with bonds with high credit rating. Here are some suggestions for you to explore. Finally, the best use of your cash might be paying off any debt, assuming you don't need the cash. Think about it. if you run a balance on your credit card with an interest rate of 15%, by paying that credit card off, you are saving 15% in interest. Another way to look at this, you just earned 15% return on your cash. That is all I have, guys. Personally, if I'm not invested and have some cash I want to park somewhere, I will go with something like Fundrise or maybe gold. Where do you park your money? Drop me a comment. Thanks for tuning in. Don't forget to hit that like button and consider subscribing if money is your thing. Until next time, peace.